High-yielding dividend stocks can be an attractive investment option for investors who are seeking investments that will offer them immediate income, stability, and also the potential for some capital appreciation. However, it's important to note that high dividend yields can sometimes be a warning sign of underlying problems with the company and could be a sign that the stock could be at risk of a dividend cut. So investors should conduct thorough research and due diligence before investing into any stock, and definitely when investing into a higher yielding dividend stock, even though there are some risks associated with higher yielding stocks. This doesn't mean that with the proper research and due diligence, high quality, high yielders can't be found. Now, it's very important to note something that I don't think a lot of newer investors really understand. Investors that chase higher yield and lower capital appreciation, these are known as income investors. Not dividend investors, but income investors. Income investing is a broad strategy that involves investing in a range of income generating assets, things like high yielding bonds, real estate investment trusts, and high yielding dividend stocks. Income investing focuses on generating a regular stream of income or cash flow, whether the investments appreciate in value or not. Here's an example of an ETF that is more income focused. You can see that the ETF does not grow all that much in capital appreciation, and this is because this fund is built to distribute as much income as possible to shareholders. Now, on the other hand, there's dividend investing, which is a strategy where investors focus on buying stocks that pay dividends, which are regular cash payments made by companies to their shareholders. Now, dividend investing aims to provide a steady stream of income to investors while also benefiting from the potential appreciation of the stock value. So when it comes to dividend investing, as we can see on the screen, this is an example of an ETF that does pay a dividend. Not the biggest dividend in the world, but look at how much capital appreciation the fund has had over the past few years. So now that we all understand the exact difference of income investing, dividend investing, and the risks of investing into higher yielding stocks or ETFs, what if you could find a perfect balance of both? The first high yielding stock that I can't stop buying more of, and that also offers some potential capital appreciation, is Enterprise Products Partners. Now, Enterprise Products Partners provides midstream energy services to producers and consumers of natural gas liquids, crude oil, etc. Now, since the inception of Enterprise Products, the stock is up around 415%. And Enterprise Products offers a starting forward dividend yield of 7.76%. And it's offering this high of a dividend yield even with the stock price being up quite substantially. Enterprise Products doesn't only offer a high starting dividend yield, but as you can see right here, they also raise their dividend pretty consistently. And although it doesn't have the fastest dividend growth rate of all time, the dividend increases have been nice, especially with a higher than average starting yield. Now, remember a second ago when I said, what if you could find the best of both? A high yielding stock or ETF that also has a lot of capital appreciation. Well, Enterprise Products, in my opinion, crosses off everything. Year to date, as far as total return, Enterprise Products is even beating the S&P 500 with a 9.7% total return, where the S&P has only returned a total of 8.85% year to date. Over the last year time frame, Enterprise Products is also beating the S&P 500, which is impressive. 3.67% versus a minus 2.04% for the S&P. Now, over the 3-year time frame, Enterprise Products has done phenomenally, with a 90.28% total return in just 3 years, where the S&P has returned 52.78%. Now, because of oil and because the industry Enterprise Products is in, obviously it's had a very, very substantial last few years, but regardless, even if we zoom all the way out to the max time frame, Enterprise Products for a high-yielding dividend stock has appreciated pretty substantially. Another stock that I just can't stop buying, and that also has an above-average starting dividend yield and capital appreciation, is Main Street Capital. Now, Main Street Capital Corporation is a business development company specializing in equity capital to lower to middle market companies. The firm specializes in recapitalizations, management buyouts, refinancing, family estate planning, and many other things in that. Now, on the max time frame, Main Street Capital's appreciation as far as share price goes is up over 200%, which is substantial considering Main Street Capital has a starting dividend yield of 6.8%. Oh yeah, and Main Street Capital pays a monthly frequency dividend. So when it comes to Main Street Capital, you don't have to wait around for every quarter to get paid. You get paid a dividend every single month. A lot like enterprise products, Main Street Capital has raised their dividend consistently over time, but because the yield's already pretty high to start off with, they do have a slower pace on raising their dividend. Now, when it comes to total return, capital appreciation plus the dividends earned, Main Street Capital is crushing it. 12.27% year to date versus 8.85% from S&P 500. Over the last year time frame, 14.54% versus minus 2.04%. On the 3-year time frame, 127.15% versus the S&P, which is less than half. Main Street Capital, in my opinion, is definitely one to look into if you are hungry for a higher starting dividend yield and also some potential capital appreciation. So those are two higher yielders that I've been buying a lot as of recently. When it comes to investing in general, I have a pretty diversified approach. I buy some very high yield names as well as some very low yielding names. But one thing's for certain, if I can come across names that offer a high starting yield, a relatively safe business model, and also the potential for capital appreciation, those stocks will definitely have my attention. If you enjoyed this video and you want to see more videos like this in the future, make sure to please drop a like in this video and subscribe to my channel for more. Thanks as always, guys, and I'll see you in the next one.